Welcome to our weekly live analysis, like every Wednesday, briefing you up about anything that's going on around the market. As you might already know, it's a pretty packed week. The next one is massive, but we have plenty of new releases in this week as well. So, just a quick check whether you can. Okay. Uh, 14. Okay. For the people that they have joined via GoToWebinar, I would really appreciate a quick feedback in regards to the audio, guys. Anything you need, as usual, stick it on the question box. And for all the attendees via social media, don't hesitate to stick your asset, your question, whatever you want, below the broadcast on the commentary section. Hi, Manuel, as usual, the very first um, to comment. Welcome. So we are good to go. I will just to show you. I will start with the dollar. It's a 30-minute chart just to brief you a bit about what's going on around. So we have seen dollar actually correcting, let's say, or a pullback away from the 104 territory once again, rejecting the highs that we have seen in May and so far in June, and reversing below 104 and currently actually settle a bit at 103.80 and just a breath away from the first support of the day. In general, there has been an inverse environment sentiment since yesterday. Yesterday we had seen a shaky risk appetite. Now things have changed. So mainly the main reasons, the main factors of the so far movements today, as is some comments from officials like ECB, who was the very last one. We had some data as well, for example, the US House Price Index, the Chinese import numbers as well. That and the exports that came weaker than expected. Don't forget that we have seen a bit of a um, stubborn, slow recovery in China. And this is something that you need to keep an eye on because it affects, in general, the market. And why is that? Because it's one of the biggest economies in the world and one of the biggest consumers. So any data out of China could amend the risk appetite in the markets. Nonetheless, as I said this morning, we have seen also weaker than expected industrial production for Germany. Now, in regards to the US data and the dollar index today, if I'm not mistaken, thank you, Zora, for your feedback. Thank you for that. So today's all about the Bank of Canada is the rate decision. So this is where the most of the attention is on because there are some kind of concerns that the Bank of Canada could do the unexpected and surprise, something that RBA has done as well yesterday. So remember that the central banks in general, they have highlighted that they will remain data dependent. Okay, so it will be very interesting to see later on. Actually, we're not it's 2 o'clock GMT, so we have 3 hours ahead of the Bank of Canada. Plenty of time still, uh, but something that for sure you need to keep an eye on today. Now, let me just sort out a bit my tab so I could see also your questions. Test accounts, Thomas. There are test accounts. There are the so-called demo accounts that you can try a bit and practice whenever you have free time. So. Um, There are demo accounts. If you check now on our website, you will find demo accounts where you can. Um, oh, demo accounts as affiliates. I'm not sure what you really mean, uh, but for sure we have demo trading accounts that you can use just um, for practice or whatever. So, but don't hesitate to contact our support team, Thomas. Um, we have a 24 5 live chat on the website. Please send them a message while I'm live. I'm sure they will be more than happy to help you. So, okay, let's start with yes, the reason that I put a dollar right here is that it's just for you to see the correction. It has lost a bit of a ground during the European trading. The antipodian currencies have mainly benefited and took advantage of this correction in dollar, but we're gonna see antipodians later on. So currently, as you can see in this 1 hour chart, the dollar index is hovering around above actually the first support of the day, and the um, and the 103.80 level, something that it has been seen as it has provided a bit of a support, at least for this week, for the current week, to the dollar index. So whether we will continue its round a ranging market between 103.70 and 104.40 is something that we're gonna confirm if and only if we see the asset either confirming a ground, a floor over here, or whether he managed to break that immediate support level, which is the week's support as well. Nonetheless, you see the momentum is neutral. RSI, even though it's close to 35, it's a bit choppy, a bit neutral. So we are in a pretty mixed and neutral mode for the time being in the near term, at least in the short term time frame. Okay, in 30-minute short, there is still some further steam to the downside, but it doesn't look sufficient enough to break that support. Let's wait and see. Nonetheless, as I was saying, the please look Nikkei. Okay, yes. Okay, we're gonna get back to the dollar later on, since we have briefly spoke about it, and we could turn a bit on stocks as well. Dollar, yen, gold. I think US is going into recession. Okay, okay. Um, what else? Is the 25 points of the bag of, okay, you know what, let's start with the theoretical questions before we move on to the technical ones, and thank you for make this a bit more interesting. So, okay, I know that the very first that asked a fundamental question, it was a manual, but the manual you asked about the recession in the US. I would like first to cover a bit the Bank of Canada, since it's today, and we're gonna have a conversation also in regards to the US and whether there is this possibility of actually it's not a possibility anymore, but yes, that a recession might or has already hit the US. Nonetheless, okay, let's start a bit with the Bank of Canada. Is the 25? So Jeremiah is asking whether the Bank of Canada interest rates policies policy is actually possible. Yes, it is. And why is that? Let me put also the, okay, this is the dollar cat. Okay, perfect. Let me just, okay. So, as I was saying, yes, it is possible, guys. If we consider the data, actually, whether the bank will hold or hike is a very, very big question. Um, Lately in the latest meeting minutes or the latest comments from the officials, they have hinted that they will remain data independent, and if it's necessary, they could get back on tightening sorry policy. Remember that they were on hold the last few months. So, however, what triggered right now the possibility for a return back to the rate hikes? It was inflation. It was inflation, dear Jerome. So the latest rise of inflation in the Canada is what above the 4% clip. It's what has boosted a bit the odds that Bank of Canada could hike in June. So even though in general the economic data in the Canada, um, they were in a better in a bet, in a, they present a better outlook from the rest of the world. For example, US or Europe. I mean, growth data are still on better than expected. However, remember that they repeatedly said that this is the pause of tightening is a conditional is in a conditional hold, exactly because they remain to see inflation like cooling a bit and uh, uh, in a decline. But this latest Canadian inflation, the fact that it came higher than expected and it present a rise, is what has, as I said, turned the attention back to a possible 25 points hike for the Bank of Canada today. It's a very, very big question. So obviously we cannot confirm what will happen, but yes, it is on the table. It is possible that they might surprise and repeat and actually do what the RBA did this week, which surprisingly shifted from the pause into another rate hike by 25 points. So hopefully I replied to your question, dear Jerome. Uh, so now let's get back to um, where is Emmanuel and the US recession. By the way, guys, before we discuss a bit about the US going into a recession, since we have the Bank of the Dollar Cat on, this is a daily chart. I would like you to see this behavior, this return back, this pullback back, uh, like trying to form more. Hasn't is not confirmed yet, but this is another rounding top over here, but not confirmed as I said. A bear rounding top could be confirmed only if we see the breakout of this floor and the breakout of this neckline, if you prefer. So this 133 territory, 133 round number, very strong support for dollar cat since February, actually since February this year. So it's a very, very important and crucial support level, because this could confirm that dollar cat could enter a bearish market once again. For the time being, indeed, we've seen in the near term that the dollar CAD is in a decline, is for a second day in a row below the 200-day moving average, breaking this 3-day consolidation that you have seen over here. I will zoom in for you to see 1, 2, 3, and also my latest down fractal. This is a daily chart, don't forget that. Okay, so extended lower yesterday and closed below the 200-day moving average yesterday, and keeps moving lower today. However, the momentum is a bit mixed. Okay, both RSI, MACD and RSI, they are like a bit. MACD actually is at zero, turn negative, but signal line is still zero, and the slope is a bit flat. RSI the same. It moved lower, but you can see that it flattened for since the 1st of June. Yes, since the 1st of June. So that shows that there is some kind of indecision. Okay, so overall, within the week and even the next week as well, you need to keep an eye on a potential breakout of 133 level. Now, today, let's turn a bit on what is going on today. As I said, remains to the downside for a second day in a row. So, you see, initially jumping to the pivot point, then a nice pullback, correction to the first support of the day. And if I just, how can I? I'll zoom in. As you can see, it keeps posting lower highs and lower lows. So it remains under pressure. Sellers are still in control. However, it has stalled a bit right now. Okay, we remove Emmanuel's question just not to confuse you. This is dollar CAD. Okay, just to close what's expected from Bank of Canada and how it will affect the dollar CAD. John, William, I have seen your questions. Don't worry. Okay, let me take it step by step because it's Bank of Canada after all today. So, yes, as I was saying, we had a nice decisive pullback. Indeed, the intraday setup, the intraday movement suggests that sellers are still in control. MACD, you can see that is well below zero, but this swing lower, possibly as on the anticipation of the data of the Bank of Canada later on. We have seen that is stalled on this floor over here. Okay, so this decline, it looks that is running out of steam for the time being. Okay, you see dodgy long length candles, more body candle, RSI flat. Even if I zoom into the 30-minute chart, you can see that the fast moving average has started pointing on the right hand side, indicating that we might see consolidation for the next few hours until the Bank of Canada release. Okay, so immediate support and resistance levels ahead of the Bank of Canada or during the Bank of Canada announcement, okay, it will be the 134, okay, 50% retracement level, round number, and this is something that if it managed to move above it, it will it means the retest of the week's peak. But also you're like searching for an even more immediate resistance area, it will be the 133.95. Okay, 190.35, the latest high, and also the 38.2 Fibonacci level. To the downside, as I said, the low of the day, which is just a breath below the support, the very first support, it could help you and it could be considered as an immediate support area of the dollar cap, so 133.75. Okay, which if it breaks, it could open the doors to 133.50, and so on and so forth. So hopefully I have covered dollar cat. John, it was dollar cat. I say, as I repeatedly said. Yes, guys, I can see your questions. Okay, no worries, no worries. I will take one by one. Just one more thing, because we have a very, very good question from Emmanuel, a fundamental question. Uh, so, in regards to the what I think, whether the US is going into recession. Okay, I was like, I'm not really. Okay, actually, I can reply this. It's not considered to be an opinion if if I just stick on the data, right? Um, However, so far this year, okay, just to be clear, so far this year, if we solely consider the data, okay, uh, yeah, it looks that if nothing changed, it could be considered as the 2023 to be a year when a recession will hit the American economy. It's, this is what we have seen so far based on the inflation, the slow growth in general, some very, very weak production data. Remember, the whole May and June so far were very, very disappointing for in regards to the data in the US, showing that regardless of the Fed efforts, it seems that they didn't manage to put some brakes on the inflation. I mean, you remember, just to remind you a bit, all these layoffs that we have seen from businesses, from big companies, small companies. We have seen in general over the year, over 2020, through many companies announcing layoffs for workers, and uh, the fact that inflation is not coming down is something that affects the spending, right? Affects the spending, and this is what has been the case so far. So far, we can say that yes, US is looking like it's going into a recession. But I mean, uh, jobs market in US is still very, very strong. So we don't know, Emmanuel, yet. We don't know. We don't know yet. It would just solely emphasize on all the rest except labor market. Yes. Uh, but yeah, that hiring on Friday, that unexpectedly high hiring NFP payrolls number that we've seen in last Friday. Uh, um, the fact that we have more and more jobs has a lot of questions around what's going on in the US economy. So the economy indeed is incredibly, how can I say that, resilient, despite all these events that happened this year. And I'm not referring only to inflation and the Fed. I would like to remind you, and the aggressive tightening, but I would like to remind you the banking crisis as well, right? And the debt ceiling. It's over, but something that put the economy once again into a key risk. So hopefully that's just sufficient reply, dear Manuel. Okay. So yeah, so far, yeah, we can say that it's looking like it's going to recession, but we cannot state that it's going into recession because there are many conflicting signals. Okay, so uh, So let's start with the analysis as usual. Nikkei in dollar yen. Let's start. Even Nikkei is now close. So okay. So okay, this is the Nikkei 1 hour chart. Okay, significant pressure as you can see since. Let me just move my microphone. Okay, significant dip for Nikkei and ASX as well, but yes, Nikkei significantly lower during and since Asia session and so far today. As I said, it was mainly on the news on the news from China. So the week of week exports as well as imports in China. Um, Even though the Chinese indices reacted on the exact opposite way, so Hang Seng got a boost, but that was because of some news about additional stimulus measures in China. And once again, China announced that um, um, repeatedly asked actually uh, the lenders, the biggest lenders, to lower their deposit rates, but mainly it was the data, as I said, and the additional stimulus measure announcement. So Nikkei bottom at 31,760, as you can see over here. 1, 2, 3, 4 consecutive hours on that floor. So failing to break it and already flattened. So this looks to be, however, um, it looks like it has already entered some kind of a consolidation mode for the very, very short term. Uh, and with RSI flattening, indicating that there is no further steep to the downside for the time being, as long as the asset holds and move above the this immediate floor seen today, the 31,760. So just to get back to the daily chart again, and why is that? Because I want to show you that this floor is not just a random floor. It used to be a resistance area in the very last week of May. It was is this now our latest swing high in May? Now our latest higher high. So these more precisely, just be precise. Come on. 31,700, 31,600. It could provide an immediate. It could provide a floor for the asset. However, overall Nikkei remains in a positive trajectory for 3 months now, more than 3 months now. Yes, 3 months now. So the overall outlook remains positive, and this is not likely to change as long as the asset holds that 31,600 territory. So this, the movement that we have seen since the Asia session, it looks more of a correction of this long-term rally. Okay, so keep an eye on that. That's great. Dear Emmanuel. So overall outlook remains positive. Nothing changed for the time being. Only a return below the 31,000 could add some questions on whether this long-term rally is running out of steam. But for the time being, today's performance could find an immediate support on 31,600. If that breaks, next floor, it will be on the latest swing high of the 23.6 Fibonacci level at 31,150. Okay, so intraday negative but to neutral, so currently flattened, run out of steam. It was oversold anyway, so you need a bit of a correction, something that could resume this decline. It will be further decline below the 31,760. Okay, so Dow, yes, Dow. So zoom in, daily chart first. Remember the huge spike that we have seen um, uh, on Friday, on the NFP day. A bit of a pullback, a bit of a correction. However, for 2 consecutive days, we have seen a pretty dodgy, steady, sideways movement from Dow Jones. So, just so very mixed performance from the Dow over here. A bit unchanged, uh, but holding. Significant is the fact that it's holding um, the majority of the gains seen last week. Okay, and above, so it's holding this the gains, and it remains above the 50-day moving average and the 20-day moving average, but it has entered a range of market as well. You can see how the fast moving up, the volume just flattened. MACD at 0, RSI at 54 and flat. Pretty sideways movement for Dow as well, overall. Now, let's just turn on what's going on today. Okay, so remain steady as well intraday, dear Emmanuel. And that remains still the case. Pretty neutral signals. This is what we're getting. So the day's lows and the day's highs could be easily used as immediate support and resistance levels, and they could, if broken, they could signal the shift and the breakout of this range, outside this range. But for the timing, yes, the small body candles, lack of volatility and indecision, holding down sideways. This is something that we could see ahead of next week's the next week important agenda, which contains both inflation from US but also the FOMC, policy decision as well. So let me just yeah, there's a lack of direction for Dow. That's something that has been seen in the rest of the market. I'm referring to treasuries as well. There's a lack of buyers in treasuries as well. So no fresh drivers, no fresh factors to move the market. So that is what is holding now. And remember, the debt limit is out of the way. So this is what is the case. The lack of news, the lack of announcement, the lack of drivers is what it has held the US indices, for example, flat. So there is only the anticipation and the focus to the June meeting next week and the US inflation next week. So it's just the inflation will be announced the day before the FOMC meeting. What else? So pretty mixed data. So yeah, Let's get to the next question. Dollar yen, of course, dollar yen. Gold chart, good news. Hello, $50 can trade while news. Yeah, you can. Don't expect. Okay, I will come back to you, dear Arif, in a second. Okay. Where we left dollar yen, dollar yen, dollar yen, dollar yen. Nice. Okay. Dollar yen correction on the dollar weakness. We have seen yen gaining some ground, as you can see over here. It has to do with the fact that risk appetite has faded. Okay, so a nice pullback on dollar again. That was not. It was also this kind of pullback is something that we have seen also in other yen crosses, such as pound yen, as for example. Since we had also oh sorry, since we have seen some data from UK today as well. So similar pullback we have seen in dollar yen, we have seen in pound yen, we have seen in euro yen, and etc. So a pullback back to the 139 level with so from a fundamental perspective, before we check the technicals together, guys, this is dollar yen. You need to keep an eye, always, not keep an eye to have at the back of your head the yield differentials between the two economies, between the two currencies. Um, it's the US from one side and the very accommodative Bank of Japan on the other side. So always have this in mind. Now, in regards to the strength of the yen, so far today in this pullback, it was mainly due to the reversal of dollar yen, sorry, of the dollar. If we consider also the news out of China, something that explains the Nikkei correction as well. So Nikkei down, yen strengthen against dollar, 139.20, flatten, try to recover, didn't manage, has pulled a bit back, consolidating again. So very mixed sideways movement. But in general, um, the fact that Bank of China, Bank of Japan, sorry, tomorrow is it or on Friday? Sorry, I lost a bit of. No, it's next week. What I was saying, next week on Friday. Bank of Japan next week is expected to stay accommodative. So we doubt that something will change on Bank of Japan. On the flip side, there is it's a huge question mark in regards to the Fed next week. But expectations are that it might deliver another rate hike. So considering all this, okay, and also the uh, the fact that so far the whole year, nearly the whole year, isn't it? Let me zoom out. Yes. Nearly a whole year, but more precisely the last 4 months, we have seen the the yen depreciating significantly. Um, so yeah, consider the central banks and the yield differential. The fact that yen it has depreciated, is expected to continue depreciating, is what is expected. So the current the last 2 weeks we have seen a reversal, but this still looks a bit a correction as long as the asset remains well supported by the 20-day moving average. You can see MACD keeps rising well above zero, so overall momentum remains on the scenario of further depreciation of yen against dollar and in general against the rest of the major currencies such as pound and euro. Now, it's a policy divergence. This is what it mainly is overall. The only thing that it could bring, it could actually change the picture over here. It will be the fear of recession. Okay. Now, intraday. I'll put the 30 minutes chart on. Recover, bounce away from the 139.10 level, immediately turn back and just flat. Nothing exciting for the time being, I'm afraid. Annie and who else asked about dollar yen. It was also sure that someone else asked about dollar yen as well, guys. So pretty flat. So if you try, however, to prepare yourself by identify the immediate support and resistance levels just to be ready if there is a significant breakdown or a bounce of the dollar yen. So 139. So let me just the latest swing high 139.50 and the 139.10 remain key supports and resistance level for the day in the near term intraday, because they could clarify whether the asset it could return back and extend its so far long-term rally, or whether it could turn further down and retest the 20-day moving average and the latest swing high. So I will put this over here. Now we'll get back to the 1 hour chart because I want to show you something. Look at that. So I know I have a lot of lines, so I'll delete some. Okay. So what I want to show you over here is that if the asset breaks the day of the low of the day, which also coincides with yesterday's low level, okay, so 139.10 or around 139 level. If the asset managed to pull back down and break that level and exits below it, then that opens the floor for a potential retest of the very important 20-day moving average and latest swing low. So this is between 138.50 and 138.40 area. Okay. Now this looks as a descending triangle as well. Don't forget that. Sorry. With a flat floor. Okay. Sorry, just give me a second. So, by being aware of the fact that it has formed a descending triangle, this will help you with another immediate resistance level. So, the trend line, the upper trend line of the triangle could also be very useful as resistance area, because a break above the triangle and outside the triangle could indicate that bulls are in control and could turn their attention to 140 or even 140.50. Okay, so far so good for dollar yen. Hopefully yes. So I will shift to gold. As usual, you're There are many people asking about gold. Okay, gold, euro, yen, gold. Okay. Mohammed, I'm start thinking that you are a pot, a robot or something. I don't know. You keep asking gold going up today 2000. No, it's not. So I will just ignore Mohammed. I think he's a fake user. Sorry for saying that, but it's kind of back every week asking the same question. But with gold being $40 below 2000, with no indication about breaching 2000 anytime soon. And nonetheless, okay. Let's move on. Shua asked about gold. Okay. Gold and Malvin and John and yeah, and John in the go-to webinar as well. So let's do gold. Okay, I'll start with the daily chart. If there is anything that you're starting with, let me know. Gold from Track Center. Gold from Chua. Trade City also asking for gold. Gold. You're very welcome, Jeremiah. Gold, Nasdaq. Okay, gold. Now, gold, daily chart. Okay, clean up this mess. Okay, as I said last week, during the NFP release, but also as Stuart mentioned the weekly analysis last Wednesday, gold remains in a downward channel since the beginning of May. Okay, currently, actually, the last 2 weeks, it has been seen bouncing and correcting up to 1970 area. Double top over here, as you can see. Let me zoom in, and you see these double fractals and a ceiling, a resistance that has been retested 1, 2, 3, 4, 5, 6 times the past 2 weeks. So that makes 1985 a very crucial, strong resistance area. Okay. Now, however, as we said last week, 2 weeks ago, we have seen this bearish cross of the 20 below the 50-day moving average, something that indicates that overall the asset remains in a bearish trajectory and that something that signals the continuation of this downtrend that we have seen since May. Now, what's going on so far? However, since last week. Since last week, we have seen gold holding some gains and actually holding a move above 1950. So 1950. You see that? So it broke and moved and extended above 1950 and breached the upper trend line of the channel and the 20-day moving average last Wednesday. Yes, last Thursday, sorry. No, Wednesday, yes. Last Wednesday, so it breached it. And since then, it stays above it, retested it indeed, but bounced again and holds above 1950. And this is because in general, the market participants in general, they weight the outlook for inflation and central bank action. So this holds the dollar sideways, yes indeed, but holding above 1950 and very close to the upper level of the channel and the 20-day moving average. So yeah, golds have held up, dollar is down, treasury yields lifted, something that adds pressure on the dollar but supports the gold, and all this could stay like that until the central bank's um, next week's decision, the FOMC central bank decision next week. What else? What else? What else? So yeah, 1950 and 1985, 1950 and 1985 are two important barriers to keep an eye on. So. Um, because a break of 1950 and a decline below it could open the door again to, could actually mean the resumption of the downtrend. So then we could seeing retesting the confluence of May's bottom, midline of channel, and the lower Bollinger Band area, which is at 1930, or even lower at 1900s territory. While an extension higher outside outside channel above 20-day moving average could open the floor to 1985. But the key is whether we'll see the asset breaking this 2 3 weeks resistance, coinciding with the 50-day moving average above 1985. That could open the doors to 2000 territory, 2000, or even 2050. But we need to see a decisive break above that, more precisely above 1990. So intraday. Sorry, 1 hour chart, zoom out a bit. You see, keep retesting the upper line of the channel, but fails to break it. Momentum is neutral, RSI is at 50, flat though. Let me put the intraday setup as well. So sideways, this is the case intraday, I'm afraid, sideways. So use your pivots as or the edge of the Bollingers, or these repeated swing fractals as your immediate support and resistance levels. A break of 1970, is it that? No, it's not. What's that? Intraday, this is the 1 hour chart for gold. Yeah, break of the first resistance of the day at 1968 could retest 1973 or even 1980, while I move below the bottom of the day in the 1950, it could open the doors to 1940 or even 1938. So next, but yeah, intraday, another ranging market. So what ranging market means? It means that if it presents a pullback away from the top of the range, then we might see it turning back down and retesting the low of the range, and so on and so forth. You can still trade if you want a ranging market, but there are different strategies that you need to follow if you are in a ranging market. Kiwi dollar. Kiwi dollar. Kiwi dollar. Okay. Here we are. Kiwi dollar. Also very flat, sideways the last 4 days in a row, small body candles in the daily chart, unable to break the 2 weeks resistance at not 61 area, but momentum overall remains negative. It's at the bottom of the last, it's at the lowest area that it has ever been since October 2022. Overall, the breakdown that we have seen, this significant breakout that we have seen in the mid of May, sorry, the breakout, I'm referring to this breakout. This is so October, November, December. This is 8 months. The breakdown of this 8 month support, 8 months floor, open. It signal a bearish market for Kiwi dollar. And we can say that the overall outlook remains negative. You can see MACD negatively configured, RSI below 50, and so on. So this latest bounce that we have seen since last week, it looks like a correction to the upside before another attempt to the downside, because as you can see, it repeatedly failed to extend further higher. So the outlook remains the same, negative, with this being just a correction. So a move below the week's bottom at 0.6040, not 6040, could turn the attention to 5980 and could open the doors to September's 2022 bottom, so in a sell-off. Intraday, zoom in, rebounded away from the 0.6057 area, extended above its pivot. However, it failed to breach the Asian session highs and is hovering around pivot point in a pretty mixed momentum, neutral momentum. Everything has flattened. Fast moving average have flattened. RSI is at 51 and holding close to 51 since yesterday. So pretty neutral indication. Something that indicates that this range will continue. So you need to keep an eye on any pullbacks away from the high of the day or any rebounds away from the low of the day. There is a bearish cross just formed in the stochastics, but as long as we don't see the slow line also pointing lower, then this does not mean a bearish bias. We can say that this means a bearish bias as soon as we see both lines pointing lower. Is that clear? Otherwise, it remains flat, close to the 60.75 area. Euro dollar. So with dollar lightly lower, lack of appetite, we have seen euro gaining some ground against the greenback. So unfortunately, it's all about dollar lacking today. So let me check a bit. Yeah, it's also the lack of key economic releases this week, which is not helping and not giving any driver to the markets as well. But yeah, a rebound of the dollar lacking maybe on the mixed sentiment as well. So euro dollar over here is moving around 0.107 area, 107 mark, which has been key in June in general, but since May as well. So So who asked about euro dollar? It was Kasim. Kasim. So um, okay. So what we have over here is a nice boost higher. However, just to zoom in a bit, with this decisive bullish candle earlier today, that was probably on the comments from Mr. From ECB's note, which repeated that more hikes may be needed. So that might be was the case of this bullish bias and the German industrial protection as well, but it could be the ECB speech on that one. So you can see it extended, it boosted euro dollar higher, coming above the 107 level. But this is look that is right, it ran out of steam already with a doji candle. So now we're waiting to see whether there will be a pullback or whether we might see an evening star formation being formed in this 1 hour chart. So it will be very interesting to see how this candle will close. There's plenty of time. There's a new candle, but the momentum intraday indicates that there is no further steam to the upside for the time being. Stochastic flattened, RSI flattened, MACD is at close to zero as well. So yeah, we need to see more. We need to see more for identify whether the euro dollar will actually extend and retest um, Friday's top. Okay, we need a decisive breakout of week's resistance and the 107.35 level. Okay, for the time being, it seems that this rebound is running out of steam. So keep an eye on how this hourly candle will close because it might indicate an evening star formation, or as I said, further boost to the upside could open the doors to 107.50 or 107.70 territory and the highs of the Friday's highs as well. Nonetheless, so pretty much the ECB speakers today didn't offer a lot. It mainly the dollar lacking that is leaving euro dollar in a bounce. And it had help euro dollar finding some ground. Mm, Overall, as I keep saying week after week, euro dollar remains to the downside, but um, um, the key will be the extension confirmed closure below the 200-day moving average and the 106 50 territory. Next question. We've seen the hikes. We reply Bank of Canada. We've said that. Abdul just covered euro dollar flat for the day. Okay, flat actually not for the day, but it has been flat for the last 2 weeks. You see, well supported by the 200-day moving average, so flat for the last 9 days in a row. Intraday also in a range, bouncing between 106.60 and 107.30 level. Latest rebound away from the floor of the day and up retesting the high of the week. But this is look like it's ready to run out of steam, so keep an eye on a potential pullback. Euro dollar, that was euro dollar. We've seen gold. Let's see a bit Nasdaq, but in a very struggling actually. Overall, as you can see, we have a nice smooth uptrend. Is the daily chart. Let me just clear Christmas. A nice smooth rally since the beginning of the year, well supported by the 20, 50-day moving average. Bolligers keep rising, 20-day moving average keep rising. You can see MACD keep rising. Overall, a positive outlook for the tech-heavy Nasdaq. Now, if we just zoom in to see what's going on the current week and in the intraday basis in near term. So 1, 2, 3 days in a row, steady sideways at 14,600 level. So the edge of this, the edges of these wicks, guys, will help you figuring out immediate barriers. So we'll go down to the 1 hour chart right now. Okay, so these are in, our immediate support and resistance levels. You can see that um, is keep moving sideways, flat moving average, flat Bollingers, flat RSI, flat MACD, sorry, RSI. Where's RSI? Just managed to extend above 50, but is now looking lower, looking ready to dip again into break lower the 50 zone. So yeah, see a breach of the peak in the range, a breach of the top of the range could uh, could suggest the return back lower, so on and so forth. So that continuous fluctuations within the top and the floor of the channel. Kevin, if you have never traded in the past, you need to slowly start by reading only, not trading, reading and learning before you enter the market. Okay, just to understand how the markets work, what is the forex market, what is stock market, and etc. What is trading? What's the difference with investing? So the very first thing that you need to do is learn, study. Next, if you understand, if you okay, so study never ends. So you will try to keep yourself up to date, learning day after day. But then, once you understand, at least you have a very first understanding how what is the market, what drives the market, then you can start with a demo account. Okay, so now what's the next question? Cat Swiss. Cat swing Swiss could be a very volatile asset. We will consider if we consider that the Swiss franc and the oil-related Canadian dollar. Cat Swiss. Looks like some structure forming around 0.6768. 6768. Let me zoom in. 6768. This still looks like to be the mid of the average. 6768 DR Jacob seems to be the mid of the 2 days price performance. The average price for Cat Swiss. So I guess you are a 15 minutes trader, 5 minutes trader, or even a minute trader. So yes, this looks to be the average price, of the last 2 days performance for for cat swing, Swiss. So we've seen a pullback below it, breaking it earlier this morning, extending and retesting once again the 6760 floor. Okay. However, interestingly, this is the 15 minutes chart, cat Swiss, guys. 15 minutes chart, cat Swiss. Interestingly, thank you for bringing that up, Jacob. In the very, very short time frame, such as the 15 minutes chart, we have seen that the asset extended since the Asia session, actually, sorry, since the European Open, pull back down and keeps extending lower since then. So consecutive lower lows, consecutive lower highs, fast moving areas are pointing sharply to the downside. MACD extending lower. Stochastic, even though it's already on the oversold area, is looking like it's further steam to the downside. RSI over here provides some consecutive lower lows, also pointing lower and indicating that this near-term decline has not run out of steam yet. Very interesting. So, however, it's still above its pivot. So the next, because we're in a 15 minutes chart, just by just monitoring the candles, you can see that there is a lot of that mainly sellers are in control. The body of this candle indicates that there is a lot of steam to the downside still. So the next support could be seen. What the ATR is telling us, not 51. Let's do the maths. Currently we're at 0.6760. No, 51, 67, 54. Yes, so it's where I place my line as well. So this is the immediate support level. If the asset managed to break to close below its pivot in this 15 minutes candle. So this coincides with the ATR and also the latest swing low. The very next one could be down to 0.6750. So twice the ATR and also the latest swing low. Okay, that candle closed, just close on the pivot, just close on exactly on the pivot, Jacob. But the fact that we have such a huge tail with bulls pushing higher, and the fact that regardless of bulls' effort, bears win and close the candle bearishly indicates that there are more sellers than bears for the time being in this very short term time frame for cat Swiss. However, more only a fresh low could suggest what I said earlier, could suggest the retest of these two immediate support areas. Okay, we need a fresh breakout. We need a fresh low. We did dollar yen. So hopefully you've watched it and you have seen both the daily 4 hour and 30 minutes chart volatile. Euro dollar is down, gold is down. Okay, well done, Mark. You mean Arif, if you can trade with $50? Yes, you can. Yes, you can. Yeah. What I'm currently using, Arif, intraday in such a short time frame, such as 30 minutes or a 15 minutes chart, I'm using 5 and 9 exponential moving average with stochastic at 533. All the rest, like Bollinger's, pivot points, and RSI, I'm using the default settings. For my daily chart, I have it. I only have. Where's my? I only have my DRSI, Bollinger's, the default settings, and 15 200 day moving average. Okay. Since I have followed your the details that I did not take into account are the ones that moved down my analysis. So you need to monitor closely, very, very carefully your chart, dear Junior. I have it by default, to be honest. I have it in all my time frames, the default settings. So that means, let me just 20 period, two standard deviation. So yeah, in the most of the assets, I have the default settings, but depends on your style. I mean, if you're using it for an hour chart, for example, you might consider adjusting it. So play a bit with the deviation, check whether it gives you like a better support and resistance areas, or if you're in a 15 minutes chart, also test it. Because in such a short environment, such as 15-minute chart, Bollinger's might need adjustment, and that by adjustment they might possibly need a detection of deviation. Okay, like this one is 1.5 and it looks just fine for cut Swiss in 15-minute chart. So if I put back the two standard deviation, okay, not bad either, not bad either, not bad either. Up, outside, oversold, so sell the overbought, so selling pressure, rebounded at the midline, extended, retested repeatedly the upper line, and put back and sold again. Another retest high, bam bam, boom. Yep, oversold. Okay, I think 1.5 looks much better because we can review the oversold conditions and overbought condition. Overbought, 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 oversold, overbought, steady, flat, and neutral, neutral, extended overbought, decline, outside Bollinger's right now, extending lower, keep falling, RSI extending lower, MACD and also a lot of selling pressure. No, even though it's oversold, it keeps. Okay. Play a bit with it. Depends on your time frame and the asset that you're trading. As I said, Kevin, as I said to, you have been also in the GoToWebinar and into the YouTube. So please start by studying. We have plenty of educational material in the website, okay? And on top of our educational material, you can also start with baby peeps, which is very, very simple, like for newbies. Tradimo as well, there are free materials, right? But start by studying first, understanding uh, um, even what is a currency pair, what is base currency, what is quote currency, what is a forex market, what is a stock market, what's a lot, what's a margin, what's a leverage. There are plenty to study. You need to study first and have at the same time a demo account on your PC just to understand at least the terms. Okay, study never ends. Okay, learning is something that you should all do constantly, and also to keep yourself up to date with the news as well. Yes, of course, Junior. We have a Bollinger Bands, many Bollinger Bands webinars. Let me send you a link, actually, all of you. Please search this website. This is our past webinar website. All the webinars that are related and contain Bollinger Bands. Okay, it will help you figuring out all the not to get it actually. It will help you to understand and use effectively Bollinger Bands. They could provide support and resistance levels. They could provide signal as well. So, for example, the break of the midline is a selling, is a bearish signal. The move above the midline is a bullish signal. Provides support and resistance levels. It provides targets. It provides momentum. If the Bollinger's expanding higher, expanding and pointing higher, that suggests that more and more bulls are entering the market. If the Bollinger is expanding lower and expanding and pointing lower, that means that more and more sellers are entering the market. If the Bollingers are flat, that means that we have entered a ranging market, a consolidation mode. Okay, there are plenty of, or if the price is outside Bollingers, it means that you are in an extreme condition, oversold or overbought. Uh, mm, have you checked with your, I don't know how you deposited the erotica, but sometimes it's not us, actually, us with us, it's just something that is done quickly. Most of the time is your provider. I mean, your bank, your card. Unfortunately, these are things that we cannot control. So it means that they have not sent them to us. Okay, that the in between the yeah. So maybe it might be your bank. I'm afraid depends on how you deposit it. Um, but always you can always double check with our support team. Okay, live chat on the website 24/5. Ask them. Yeah, but possibly you cannot see it because as soon as we get it is on spot, it's automatically it will be credited on your account. So possibly is the is who the whether you have used a bank transfer. So in this case, is your bank. Uh, in general, the payment provider that you have used. Okay. So last but not least, once again, gold, and I'm gonna call it a day, guys. Oh, 30 minutes short, a nice sell-off and a reversal. Remember, I don't know how many of you were here when we initially analyzed gold, but remember that I told you that it's at the edge. It had retested the top of the range, the 1966 level, and because it's in the range market, we might see a nice pullback and a retest of the bottom of the range, and we need to search for a possible evening sub formation. This is what we get: an evening sub formation, extending lower, breaking pivot, bearish. Can you see this bearish cross of the fast moving average over here? And the next floor to be seen and retested looks to be 1954, the day of the low, and below the latest, the very first support of the day. A nice pullback and rejection of this 3-day support, resistance, sorry, 1966. So sell off intraday, the short term for gold, reversal back to 1955 level, or even 1954 could be seen, could be possible, since you see stochastic keeps pointing lower. There is further area to be covered to the downside. RSI the same, nice round and points lower, so there is further steam to the downside still. So the asset could possibly test the 1954 for gold. Let me double check whether happened something else happened that I'm not aware of. Where's the news? Whether I missed something? No, I'm afraid not. Dollar remains one of the weakest uh, currencies of the day, but the last 2 hours, yeah, it looks that it has found some ground. This looks to be just okay. Let's get back to gold. Nice pullback. So keep an eye on this key double bottom with the support level because, as I told you earlier, that this is something that it could trigger further decline and a retest um, of the May's bottom. However, as I repeatedly said earlier, the gold is holding quite well the gains that we have seen. Its gains actually above 1950. So yeah, that could remain the case ahead of the new week, ahead of the FOMC meeting, and yeah. So in summary, 1954 is your next immediate support level. If it breaks that, so keep an eye on 1950 and whether it will manage to break that level. But yeah, if it holds above this floor, 1954, then that suggests that it will remain in a range bouncing between 1955 and 1966, something that has been seen the whole week, actually since, yeah, the whole week, as I said, yeah. You should know, guys, that overall, because Ali is asking in general about gold. As I said initially, Ali, gold remains in a downwards channel since the beginning of May, so for a second consecutive month. Okay, so overall, actually, the outlook remains negative. We need to see it outside and above 1990 area in order to in order the outlook to shift from negative to positive. Okay, the past 1, 2, 3, 4, 5, 6 days in a row is hovering around 19. It's hovering actually uh, within the upper area of the channel, but keeps remains below the 20 and 50-day moving average. And let's not forget that bearish cross that we have seen in the daily chart, bearish cross between 20-day moving average and 50-day moving average, with 20 keep pointing lower and this gap between them expanding. So that indicates that there is further stim to the dollar. However, the near term momentum is neutral, and that is what holds for the time being this week. The gold bouncing in a range, bouncing between 1954 and 1960, 67, 66 area. So on this pullback that we have seen the last 45 minutes, we could see a retest of 1955. However, the asset remains in a consolidation mode as long as we don't see it breaking any of the two barriers that I mentioned, the 1954 and the 1966. I use a calculator for ATR just to cross check. Don't remember where was that. It was on gold. It was, I don't remember the was when we were checking. Was it was on dollar cat, right? I don't remember where it was actually. Yes, I just wanted to double check the next appropriate, the next support level. So I don't remember which asset was it, but yes, I use the ATR. So the current price, if we are in a decline, the current price minus the ATR or twice the ATR to find the next support levels, and whether those levels also coincide with any of my technical indicators, just such as fractals or something else. So yeah, it's just the minus and the plus of the ATR, or two times the ATR. Okay. Yes, it was Cat Swiss. I was Cat Swiss, and I cleared that up. Sorry for that. Yeah. So okay, let's use the 5 and 9. Okay. Oh, nice. Broken. This is the 15-minute chart. Cat Swiss. Broken. Pivot point extending lower. Let's see, is this is not running out of steam. Still moving average are pointing lower. RSI still pointing lower. Stochastic still pointing lower. So ATR says is at, this is a 15-minute chart. 0.00045. Currently we are at 65. Let me just, this candle opened at, come on, yeah. This candle opened at 65.58, so 0.6515 minus 0.45. So this is 67.53, and 2 times 53, this is somewhere here, and 2 times ATR stands for 67.50. 67.49 to be precise. Okay, so these are the immediate support levels, and you would like to find the resistance area as well. Would be 57 plus ATR, which is at the pivot point actually. 67.60, so which is our latest swinging above pivot. So this is the immediate resistance area, and these two yellow lines, our support area if the asset keeps falling lower, and that seems the case if you would consider the stochastic and RSI. None of the of these two momentum indicators and the fast moving average, none of all three indicate that this decline is running out of steam yet. Very interesting. That's it. Thank you, guys. I'm gonna call it a date. Keep an eye on Bank of Canada, as we said. Aussie remains, if I'm not mistaken, the biggest gainer of the day. Do I have Aussie somewhere? Yes, some pullback, but remains the biggest gainer so far today. Dollar is lacking, even though we've seen the last hour a bit of a rebound. What's that? Trade balance from US just released. 74.6 billion deficit versus the 75.2 estimate. Labor trade balance from Canada presents a surplus. Bitcoin and Ethereum in a correction potential. We haven't seen cryptos today, but holding yesterday's gains. This is Bitcoin holding yesterday's gains. So let's wait and see. Yeah, that's it actually. I'm gonna call it a day if you don't have any further questions. I think I covered everything. Christopher Londani, I have covered all the assets that you're currently asking me. Can you please check on YouTube once again our analysis, because we have covered gold, we have covered cable, we have covered euro as well. So please check our video as As soon as I'm done, it will be saved there as well. Thank you very much, everyone, and have a great day ahead. And I'll see you again. We're gonna have a question and answer tomorrow in Instagram live. So I'll see you again tomorrow, I guess. Don't forget Canada to late in an hour and a half. Tomorrow, gross domestic product from Europe, Chinese inflation on Friday, and the unemployment and the labor data and general employment data from Canada as well. So thank you very much. Have a great day. Bye bye.